What's going on, guys? Back with yet another trade idea, TTI. Listen, guys, if you've been watching the last few videos and you enjoy them, you find value in them, do me a favor. Like, subscribe, comment. Let me know if you like this stuff. I want to continue to make this stuff for free for you guys so you can see how we work on the inside of TTI before you end up actually making the decision to join. If you've watched the last few videos that we put out, this is the exact same trade setup across the board. We're looking at a potential stage 2 breakout. You can't see it. That's all right. I'm going to go ahead and lay it out for you. We have your stage 3 distribution phase, your stage 4 declining stage, your stage 1 accumulation stage, and hopefully that stage 2 breakout, right? It's the exact same setup we found in DraftKings. It's the exact same setup we found in STNE. STNE is up over 200% for us. DraftKings is up over 50 right now. So this specific setup is working. Unlike those other two, though, you're getting this prior to the actual breakout. Let's go ahead and go through the actual trade idea here. We want it above 12. First things first, the sector, this is going to be a healthcare name. Industry, this is going to be a medical specialties name. Industry is performing well. The healthcare sector in general is all right. There are obviously other sectors that are moving better, specifically technology and communications, but healthcare is greenlit in certain areas, including this medical specialties industry. So this is the right type of setup that we want. It's the right sector, the right industry, etc. Right? We have a 6% ADR, meaning this thing is going to move. It's very volatile. We don't want to be trading anything underneath 3 ADR. It's too slow for us. This is above the 50 RSI. Therefore, it is bullish momentum, although it is a little bit weaker. We did break below that 50 area back in March. We still like the trade, though. This is still showing us great bullish momentum here, being above the 50 RSI and pressing up into the overhead resistance. The VRVP is stacked, which is what we want to see during an accumulation phase. And then obviously once we break out above this horizontal area near 12, we see very little volume. So we expect that if this thing breaks out, there's going to be very little resistance on the way up. So let's actually go ahead and talk through this really quick. We want this thing above 12. Now I want to preface that we did start opening a position in this particular trade on Friday. We tried to front run the 12 breakout. Totally fine. We grabbed a couple contracts each just to get our foothold in. Not that big of a position we're going to be looking to add above 12, but as of right now, this has not confirmed as a breakout. So you're getting this prior to the actual breakout. How you want to play this is completely up to you. Just want to let you know these contracts for me personally right now are down about 15%. I'm going to obviously continue to hold, but we want this thing above 12. We want to cut it below somewhere, a couple pennies below this 1050 area, and we want to target this 17.5 area. This is a 3-to-1 setup, right? This is why we like to use the fibs. It gives us damn near a 3-to-1 setup every single time. If you take just at face value, you buy the exact fib breakout with a stop below and a profit target there, you get a 3.05 to 1 risk to reward as an equities trader. That is very good risk to reward, right? And as an options trader, obviously that keeps us out of trouble. If we're buying 60 to 90 days out, we get a rebate on those contracts if they don't actually end up breaking out. So what we're looking for is a move above 12 to about 17.5 or a 44% move. It seems insane, but we're seeing this hit over and over and over, especially, I want to go ahead and point out one more time, at a 6 ADR, a 45% move is realistically not that many days in a row if this thing goes parabolic. It's just not. It's totally within reason here. It passes the sniff test. If you look at the screen really quick and you look at the options chain, I just want to point out that we are long the $17 calls. As of right now, they're slightly outside of the standard deviation band, which is something we generally don't do, but it does match up with that 0.25 delta that we absolutely love. Has a 67.6 IV with a 1.8 IV rank, meaning this is going to be a little bit riskier of a play. We generally don't like going straight calls above 50 IV because the risk of IV contraction hurting the premium is there. But we like it because it's an IV rank of 1.8, meaning historically 67.6 is low for this name. And we expect if it breaks above the 12 that IV will expand, thus giving us both premium appreciation on the directional move up and IV expansion. Last thing to note here, there's an elephant print on the chart. $17 call has 1.12K open interest. It did not have that much when we originally opened it, but people are or were buying PACB at the end of last week, and therefore it allows us to hold this contract with a little bit more conviction. Now, the way that we're looking to specifically play this inside of TTI for the guys that grabbed a position at the end of the market session on Friday, we do not want to continue to add into this until we break above 12. And obviously inside of TTI, we have something called the BRB entry mechanism. And what we're looking for here is a break above 12 and a close, which is very important, a close above 12 with more than one RVol, relative volume, and then a pullback in towards that 12 area to load up more contracts. If this doesn't happen and we just break and gap and go, that's fine. We'll take the trade as is. We're already positioned, although very light. we can still take shares or do something else and grab some of that exposure to the upside. But if it does pull back in towards previous resistance, now turn support, we want to continue to add into that into a full position there to take full advantage of this potential awesome stage 2 breakout incoming. Last thing I didn't really talk about, but it's very obvious, we're trading north of the 200-day moving average and it's sloped up. This is a great setup. Like I said, it's prior to it actually breaking out, so this is one of those trades that you can position yourself as it's happening instead of trying to chase this. Also, if it doesn't ever break out of 12, well, we'll be stopped out at around that 1050 area, and guess what? You never lost anything. So this is a sneak peek on how we think about trades inside of TTI. This particular setup, these stage 2 breakouts with 500 plus day bases all over the market. They're hitting left and right. We're going to go ahead and take an opportunity to take this PACB trade as well. So guys, once again, if you like the video, like, subscribe, comment, let me know, and I will catch you in the next one.